Hello and welcome to MasterChartsTrading.com market recap for Friday, September 11, 2015. So as I look at the markets and the charts, the bulk of evidence still points to a continuing correction or maybe a sideways action in the markets. Of all the major ETFs that I track, QQQ is still a lone holdout in the bullish camp. And we'll look at bonds. They may be ready for a bounce higher. And also look at gold, which is sort of in the decision point. It may collapse further or it might rally from here. And finally we'll look at copper, and I think it's a short setup for now. Okay, so let's look at the chart of S&P 500. So the dominant feature of this chart still remains this major drop that happened a couple of weeks ago. The major support was broken. We had two Mariposa candles in a row, and then we rebounded. So this rebound kind of continued into, well, we had two tests of a breakout. Bulls were trying to take control these 2 points here. Both times they failed. Here, actually, this is a 20-day moving average, and it was clearly the bulls were turned back right at the 20-day moving average. So for now, the rally has petered out. Clearly, this area here is kind of like a relatively easy pickings for the bulls, so we may easily see a rally to 2040, 2050. But now there is lots of resistance in this 2040, 2050 area from support break and previous lows and the support break, and now the 50-day moving average here as well. And then further above this 2070 is the 200-day moving average. So the bulls really have their work cut out for them. Now, so in the past we had breadth thrusts or ITBM, breadth momentum oscillator, buy signals when the breadth momentum oscillator crossed above the 10-day exponential moving average. Now this did happen, I believe, yesterday, but since the 50-day moving average is now below the 200-day moving average, I am hesitating to call this a buy signal, because if we assume that now we're in at the very least a short-term bear market, then I will be looking for shorting opportunities, and to go long here would be kind of like picking bottoms, I guess. So next chart actually, and also, for example, this S&P 500 new highs and new lows indicator is still firmly in the bearish territory, because it has crossed below the -5 threshold, and it is yet to go above the +5 threshold. And then once again, before when we had this massive breakdown, the advanced decline line did confirm this breakdown. So for now, on this chart of S&P 500, I am not looking to go long, but also I'm not yet ready to short it. So it's sort of one of those moments when it's, in my opinion, best to just kind of completely stay away from the market. We could easily rally and make a new high, and then if we do make a new high, that will be considered a breakout, and then once the breakout is confirmed, the price will most likely come down a little bit, and there will be opportunities to go long again. But at this point, my opinion is to just completely stay away out of the market. Next chart shows the S&P 500, but on a slightly longer time frame. This is about 11-12 months of data. So we had a nice long consolidation, and this could have gone either way. We could have easily had a similar breakout to the upside, but it clearly didn't happen. We had a breakdown, and we kind of stopped around the October lows and then rebounded. So this whole chart feature looks to me like a bear flag, possibly. Bear flag, this is a handle, and this is the actual flag itself. So if the bear flag breaks down, so if this trend line breaks down by a close, let's say at 1920, easily we could see a retest of this lows here at 1820 and possibly lower as well. Now, again, we are very oversold on various momentum oscillator, like this price momentum oscillator, for example. It's very oversold and even yet to try to recover, a rebound. So again, I definitely don't want to go short here because we're very oversold, but at the same time, because for example, this 50-day moving average is now below the 200-day exponential moving average, then this could be considered a bearish security. So I don't want to go long or I don't want to go short. It's kind of like exactly as I said before, it's one of those times where it's possibly just best to stay way out of the market. So percentage of stocks above the 200-day moving average dropped below 40 and is yet to recover, even to go above 50. So right now we're around 32%. Bullish percent index, similar situation, 36. So all of these indicators are really bearish. And taken as a whole, really don't paint a picture of a strong bull market at this point in time. It can easily morph into something more bullish, but at this time I don't think it's that bullish. So next is New York Stock Exchange Composite Index with more various breadth indicators. First of all, death cross 50-day moving average moved below the 200-day moving average, so that's a negative sign for New York Stock Composite Index. We have the advanced decline line, advanced decline volume line, new highs, new lows, bullish percent index, percentage of stocks below 200-day above the 200-day moving average, all of them firmly in the bearish territory. And yet to move into, at the very least, positive territory. So right now, still very much, negative and bearish. So again, not a very encouraging signs for the bull market at this time. It could easily change in the future. Next, let's look at one of the holdouts of the major ETFs. So, major ETFs are S&P 500, SPY, QQQ, the Nasdaq 100 ETF, and IWM, the Russell 2000 Small Caps ETF. So, out of those three, the only one that's still bullish is a QQQ, and you can see the 50-day moving average. The red line is still above the 200-day moving average. So, still considered a bullish security. Now, on Wednesday, we had an interesting candlestick. We had this big red candlestick. So basically what happened is in the morning, the price gapped up, but throughout the day, we continued to sell off. So this entire candlestick now, or rather the real body of the candlestick, engulfs the real body of this previous candlestick from Tuesday. So for now, this is an unconfirmed bearish engulfing pattern. It would become confirmed if we have further price pressure to the downside. For now, it hasn't happened yet. In fact, these two candlesticks are what can be considered inside days. So this candlestick from Thursday is entirely within this Wednesday's candlestick, and so is actually Friday. So for now we have kind of like consolidation here, and if we break to the upside, then this bearish engulfing will be negated. For now it has not been negated, but also it has not been confirmed. All right, So that's stocks. Next, let's look at bonds. TLT, 20 plus year Treasury Bond Fund, kind of like a bond treasury proxy for United States market. So even though the 50-day here is below the 200-day, I look at some of the other indicators for this security, and I still think that this TLT is still in a bull market. We held support here 3 times and then rebounded pretty strongly. Then here in mid on the 24th, we had I think this is a outside reversal of almost like a bearish engulfing with a confirmation next day. And then the price kind of further pushed further. But for now, if we assume that this is a bullish security, we're going to say that we're looking for oversold conditions, and MACD, for example, is already oversold, is in a negative territory. So even right now, as of Friday, I think this is a already oversold security, and I'll be looking for bullish setups. Now, kind of, for example, like here and here, those are bullish. These were bullish setups for me. So I think TLT will most likely rally, unless, of course, something happens this Thursday, I believe, which is a Fed day, and anything can happen. All right. Next, let's look at gold. Excuse me. Gold spot price. So bear security, long-term, bear market. We had a nice bear market rally here in early August, and then it ran into resistance in this area, which was broken support in the 1160, 1170 area, and then pulled back. Now, this week we actually had a minor support break on Wednesday at 11, as the price broke below 1116, but I think it's stabilized here. Now, I'm tempted to short it, and in fact I was tempted to short it right here as well at this area here, and if you did, that's nice gain right there as well. Now, I also look at GDX as a confirmation of price action for gold itself. So let's look at GDX next. So obviously a bearish security as well. We had a major breakdown here. Now the price rallied together with price of gold and into the 23rd, I believe here. You notice here that the price did not close above the 50-day moving average. Here it was almost there, and then it started above it but closed below. So if you were able to short right here, also very nice gain over basically 3 days. But I think we're finding some sort of a support. Looks like the $13 area is of importance to GDX. Friday, actually, we broke below it on the intraday basis, but then closed above $13. So this could be like an inverse cup and handle. And if indeed this is an inverse cup and handle, then we can see this entire price, like $4, $3 or so, duplicated on the downside. So it could, if this is indeed a cup and handle, this could be break down to like $10. And on the bearish front, the new lows in the advanced decline line was registered right here on, I believe, on Thursday. And the new low in the advanced decline volume line, same thing, it was registered here on Thursday. So it's not a very good sign. The on-balance volume is showing still a pattern of accumulation. So you can see that this is a low that was registered here, but here we have higher lows. So we're seeing some conflicting evidence here in the GDX and the breadth indicators. Now, one of the more reliable, in my opinion, is the gold miners bullish percent index, and it was at 0 here and 0 here. So when the bullish percent index hit 0, it's almost like a counterintuitive indicator. We had a rally here. Now again, we have at 0, and just on around here, looks like we are finding some sort of a support, and we're actually at about, only I think one stock within the entire index, GDX, is on a buy signal. If we see any kind of follow through on Monday to the upside, we could see another rally attempt. Now, some levels to note, of course, is $16 here. If the price manages to close above the 50-day moving average, most likely I'll be looking for shorting opportunities. Now, of course, $16 is a first target. Well, actually, this 50-day moving average at $14 is a first target, but then $16, and then this around $18 is a broken support, and the 200-day moving average around here as well. So, as far as the bulls are concerned, there is a lot of work for GDX to cut out for it. Alright, that's all I wanted to say about gold and GDX. And then finally I wanted to look at copper. One of the setups I thought was a short setup. So this is a copper spot price. Similar to many other commodities, really got knocked down pretty hard. Hit a multi-year low here in August 24th, and then rebounded. Now this one is a little stronger than previous. You notice that GDX did not close above the 50-day moving average. That this one actually managed to close above the 50-day moving average this week, and then all this week, most of this week, actually stayed above the 200-day moving average. Now, since this is a bearish security, I'm looking for bearish setups or short setups. So notice here that the MACD became positive, and then if you were shorting here, then this is a nice little gain here, and then a similar thing here. MACD became positive in a bearish security, and then a trigger signal occurred here, and we had a nice drop here. So basically we're there. MACD is positive. I'm basically looking for a trigger to go short in one of the ETFs you can short is JJC, which is a copper ETF. So leave you with that. So if you have a margin account, you can short it via JJC. Unfortunately, there is no inverse ETF for copper. Okay. Quickly wanted to point out how to find us on the internet. Please go to MasterChartsTrading.com. We're having our trade alert services is hopefully going to be ready shortly, and hopefully October 1st. So please do sign up for our mailing list, and you will receive a offer once we're live at a discounted price. We have a blog where this information will be posted, video section, and public charts and social page. If you click on that, you will see that there is a link there to public charts page. This is where I post most of the charts that you see in this video. Sign up for our mailing list. If you have Twitter, Facebook, YouTube, or StockTwits accounts, you could follow us there as well. Thanks for watching, and have another great trading week. Bye-bye.